as I was going through, I didn't plan or remember this is Vision Sunday, but as I was, and I taught this class before, but as I was preparing for it, I was making changes and I made some adjustments. I was just being led to make some adjustments and some changes. I didn't know why, but after hearing him, what he had to say, I understood what my adjustment, why my adjustment were made.
How cool is that? Thank you,
Wonderful.
Jesus.
So
Thank
no
you, Lord.
further ado, I just want to go ahead and jump. So we are doing biblical finance. This is week 1. And what we're talking today is going to be record keeping. So when we do share the syllabus, this would have been like week 3, right? But I think it's good that we go through the practicality, get our homework, get out the gates, and then we're going to be inspired again by next week by Dr. Cora, when we already started and we see, okay, what we're doing, how we're going to keep pressing forward. So I think it's going to flow, real well. As I negotiate down here, okay, there we go. All right, so the book that we're gonna, the course book that we'll be learning from is gonna be from Dave Ramsey. This specific book of his is gonna be the Total Money Makeover. Okay, so you can actually get this book from the bookstore downstairs. They usually have it. I want to say it's about $14 give or take. But you can also download and print a copy online. There's a PDF version of the book is also available online that you can go and have access to. In the book, the main focus is on Dave Ramsey baby steps, right? The 7 steps. And I'll just bring it up real quick.
Yeah, we'll have that on the app too for you guys to download.
I did notice last class that if you don't have a Google account, you may have to open up a Google account because these are kept on a Google Drive. So if you have trouble downloading off of the resources of the app, just get in touch with one of the instructors. The phone numbers will be there, or get with one of the instructors after and get the number, and we can help walk you through that. But if you go on one of the links and you press it, it might say, we need a Google account. Don't get razzled.
All right, so these are the baby steps that he's going to talk about. Real quick, just so we can name them off. Saving $1,000 emergency fund. Then we're going to pay off debt using a debt snowball. Then we're going to save for a bigger emergency fund. Then we're going to start talking about investment, college funding. Not everybody's going to do that. And then we're going to look at paying off your home early. And then finally, we're going to talk about building wealth and giving. All right, so those are the baby steps. And as we go through this course, one thing that we won't do is we won't be repeating the material as like reading it to you or going just teach it from the book. This is going to be the thing that's going to influence us, but we're going to expect that you do the reading, right? And we're going to share some important highlights, what we think is good, and go to some of the practical stuff that we think that'll be a benefit. Mm-hmm. But we're going to ask you to read the material as well, all right? Because there's a lot of good information, a lot of other good examples and other people's testimonies that will be there that they'll be able to influence you as well, right? And inspire you, all right? So so when we talk about what we want to talk about is us maintaining our homes, right? And we're talking about financial plan. And the first thing I want all of us to remember, right, is that when we talk about our financial plan for our home or running our home, realize that you are operating in a business, an organization. Your business is your company, it is your organization, right? If you have a spouse, or if you have children, you have an organization that you're managing, right? And understand that you are a chief CEO, right? Which is the chief operating officer. You are the chief operating executive as well, which is also making your plans, right? And the vision, right? For your team and directing, you're the face. And then you also the CFO, you are the financial officer of your business as well, right? So you're carrying a lot of hats, right? So I think for a lot of us, we forget or we don't realize that that's the role that God has put us into, right? Like again, the word said that, like, everything belonged to him, and he had given us these things. He has entrusted us for us to be a steward of it, right? So it belongs to him, we're gonna steward it, and and when it comes to our household, we are managing it like it's our organization, right? And if you look at a successful organizations just don't happen, right? They just don't go day to day and say, let's see what happens. They have a plan, they have a vision, right? And they monitor that vision, right? And we need to do the same thing with our organization, right? So we're gonna talk about budgeting and spending. And I know when I say budget, I wanna get it out the way. When we talk about budgeting makes us cringe, right? We don't like budget, because to me, budget means that I'm gonna be restricted, right? And I'm gonna be under control. And I don't like being under control. God will tell you, I don't like being under control, but I will submit when I need to, but I like to do what I wanna do, right? And I like to have that, do whatever I want. So sometimes we hear budget, we get the misconception that budget is taking our freedom away from us, right? It's taking our control from us, right? Yeah, but we're gonna use more of the word spending plan, right? And it's kind of the same thing, but they're a little bit different, right? So let's look at budget first. So budget helps us plan finances by detailing your income and expenses, by allocating your income into strict expense categories to control your spending. So that's the definition of a budget, right? But it is to help us with our spending, right? And sometimes we don't plan and we need help with our spending. So this in itself is not a bad thing, but a lot of times we are rejecting it because we don't want that restriction. So what we want to look at is more of a spending plan. Now, what a spending plan does is a type of budget that's combined with your financial goals, right? To plan out your spending, which is more of a roadmap than a restricted, non-negotiable path. It focuses on what you have over after meeting your basic needs to improve your life or reach a goal that you have set. All right, so let's go over this again. So it's a spending plan, it's a type of budget. So it's not a budget, it's not just a budget, it's a type of budget. But what it does, it encompasses our goals, our goals, right? Another word for goal is visions, right? So, and it's more of a roadmap of how we're gonna get there. And what we do is one of the words I wanna look at that was very important, that it focuses on what we have left after our basic needs, right? So our basic needs are shelter, food, transportation, right? Now, I'm sure if we look at what we spend, it covers a lot more than our basic needs, right? And I'm not saying we need to downscale and go completely down to that, but your vision and your goals, right, would help you determine how you need to adjust your additional spend above your basic needs. For someone, that's gonna be like ripping it off. For some of us, we just maybe scaling it back a little bit, right? But it's all gonna be different for all of us. But our spending, our goals is gonna dictate what our spending plan is gonna be, because what's left over is gonna help us to accomplish our goals and help us reach the vision, right? So, write the vision. So it's one thing to have a vision, right? Have it in our mind, but I want you to write the vision. And it may seem like it's like a waste, but write it down so you can see it, understand it, right? And Habakkuk, I keep forgetting. Habakkuk, right? 2:2, that. The Lord, so this is when he is kind of complaining, and the Lord replies to him because he has a vision, right? And he's sharing with them. But he's telling him to write down the revelation and make it plain on a tablet so that a herald may run with it. So writing on a tablet, he was talking about writing on like a block tablet. So we don't write on block tablets anymore, right? But we do have a tablet. A lot of us have tablets now, right? More different type of technology. We have tablets, but we also have paper. We have different things like that. So he's telling him to write it down on something that he could access later. But he's also telling him to write it simply so that a herald, which is simply a messenger, could run with it, right? So when I think about us running our business, we have our spouses, we have our children, we should be sharing our visions with our family. It shouldn't be just in our mind, it should be shared, right? And if you was at the service earlier, you heard this, where he was talking about the team that rowed, right? But think about in our own life. If we have a vision, right, and we decide we need to make a decision, right? And we don't know exactly what decision we need to make. If we know what our vision, our goals are, we can look at that, and that will help us. Is this gonna help me reach that? If it's gonna help you reach it, then that may be a decision you wanna make. If it's not gonna help you reach it, it may mean something that you may wanna put off or not do, all right? So those could be your instruments that you use. So you're gonna have facilitators that are gonna help you, but keep in mind that your vision, your spending plan, is the basic tools that you need to help you with your future decisions. All right. Now, we all came to church today, right? Of course, we all here, so we all came to church today. But let me see. If I asked you to give, you know what I'm talking to. If I asked you to give me directions, right, to get to church, how did you get to church? From when you walked your house, what left, what rights, how many miles? How would you give me direction to get here?
On the west side and Chickasaw, I made my house, going through the gate.
So I gotta go through a gate. Now I'm gonna see a light. I'm gonna go through a light. And then what I'm gonna do
I made
next?
a right.
I'll make a right turn.
I made a right turn on Vista, and I went down to Econ,
Okay.
made a left on Econ, came all the way down, the church is right there. And I went through the light, and I turned into the parking lot, made a right.
So she's giving me great directions, right, for me to get here, and I'm trying to follow those directions from where I'm at. Where would I end up?
Somewhere different.
Somewhere different.
The destination's the same, but the route's different.
The route's different because what's different about where I'm at?
Where your
You
starting
came
point.
from
My
Starting point.
my starting point. So I need to know what my starting point is, alright? So in order for me to get to my desired location, I first need to know where my starting point is, right? So our starting point, even though we may have similar goals, right? Maybe to be able to retire with pride, be able to retire with our dignity, have a certain amount of investments, be able to leave a legacy behind, whatever the case may be able to enjoy my older years, enjoy my life right now, right? And be able to share and give. These may be some of our goals, but where we're starting from may be different, but we're gonna end up there, right? Our path may be different, right? So when we talk about our starting point, what do we need to know when we bring it back to our business, our organization? What's our starting point? All right, so we look at financial statement, right? So Dr. Cora, she used the word financial statement a lot, and I always forget what I understand, but sometimes I forget what topic it is. So you know, because I always say what term, because when as an accounting background, financial statements represents different type of statements, right? But for us, financial statements should use it synonymously for a balance sheet, right? But to me, that's just one type. Now, a balance sheet is also known as a statement of financial position. It also is known as a net worth statement, and is also known as a financial affair. So I like those first two, financial position, but it's telling what your financial position. Now, a balance sheet is not over a period of time, it's at a specific point in time, right? So that's where you at right now. net worth, so the same information, a net worth lets you know what your net worth is, and we're gonna talk about how we determine what our net worth is. And of course, financial affairs, I don't use that term, but that's also another common name for it. But what is this definition? What is the definition for it? Is what a company is worth from a book value perspective by reporting the company's assets, liabilities, and equity at a particular point in time, again, particular point in time. And what it's looking at is the book value perspective, right? Book value, not mind value, memory value. Write it down. Understand where your records are, right? Understand what you're doing, right? So book value, and it's looking at my assets, and we're going to define what the assets are, liabilities, and equity, and it's telling where we at a particular time, all right? And when we're looking at what we're, so when we think about this, here's the formula for assets, your accounting definition or your accounting formula. So we talk about assets are equal to liability, which is also debt, plus equity, right? So I think that definition right there, that formula, is why we have so many different misconceptions about debt, right? Because when you look at this asset, it's supposed to be, it sounds like it's a good thing, right? But when we say an asset is equal to our liabilities, which is debt plus equity, that kind of makes it seem like maybe debt is a good thing, right? Not necessarily, right? But when I look at organization companies and I look at how companies decide how they're gonna finance their organizations, they finance the organizations one of two ways. Either by their equity, means the money that they raised, right? From the profits that they earned, their retained earnings, right? Or they, another way of adding equity is I'm gonna bring on additional partners or additional shareholders and give them a share of my earnings. And if we make money, they get to share my earnings. If we don't make money, they get to share in not making money, right? No risk. I gotta pay a little bit more for that investment though, because of the risk that they're taking. Another way I could start my business is by going and taking a loan, right? Now, if I take a loan, I don't pay back based on my earnings. I pay back based on the commitment, the obligation I made to make that loan. So that's a debt, that's a risk, right? So organizations, they have to decide how much of that debt, how much of my business financing do I want to have debt, how much I want to have financing, and they will determine what's reasonable for them. Too often we're doing it in our organization. We're not running the business. We're not running profits and losses, right? So we don't need, a lot of times we will take that mentality that they're doing that's maybe something good for them, but we're taking it and we're trying to use that for us. And we're taking on debt, credit cards, different things like that, buying things we want now because we can't wait for it later, right? And creating that, right? So yes, is a credit card an asset? Yes, a credit card is an asset because it allows you to buy something and get your future benefit. Is it a good asset? Is it beneficial to you, right? So if not everything, so I know Ken talked about that, not everything that is permissible is good for you. He says something that everything that's permissible is good for you. And that's gonna be one of those things there as well, right? A credit card. But let's talk about each one. So asset is a resource with economic value that a company owns or controls with the expectation that it will provide a future benefit, right? Liability is something that is owed to someone else. It can be legal or regulatory risk or obligation, all right? So same thing with the debt we got paid back. Equity is the remaining value of the owner's interest in the company. It is a difference between assets and liability. So if I want to look at what my equity, because I care about what I own or my net worth, not the word for equity would be our net worth. For us, our assets minus our liabilities, right? Is what that'll be. So I'm not going to bring it up. I brought it up in the first class. I'm not going to bring it up to save time. But if I looked at like an old school balance sheet, account balance sheet, I will see my assets will be on one side, right? And I will see on the other side, I'll see like the liabilities and the different equity, owner's equity, shareholders' equity, or owner's equity on the other side. And when I add those two sides, versus, not both, the bottom of both sides should equal, means my liability, my equity should equal whatever my assets were, right? If they don't, that means as an account, I need to go back and fix something, something's not flowing correctly. So, yeah, I'm not gonna break this up this time, just to save a little time. So, these we do have, we'll give this out at the end, different balance sheets, and we're gonna talk about how to prepare the balance sheet, and how to also prepare a, financial statement again. Alright, so, statement of cash flow. Okay, so a statement of cash flow, what this is it provides aggregate data regarding all cash inflows that a company receives from ongoing operation and external investment sources. It also includes all cash outflows that pay for business activities during a given period. So the first part talks about all inflows that a company receives from ongoing operations. So profits and loss, running a household, salaries, income, whatever our income is, right? So our income, what's coming in, and then the other part talking about outflows, business activities. What are our expenses for our household, all right? So if I wanted to look at a statement to see what my cash flow was, what's an easy statement I could go and look at? Bank statement, a bank statement. We've looked at our bank statements. If you have direct deposit, you have your inflows, all your expenses are coming out. You see what your expenses are, right? But I'll tell you right now, if you're running an organization and you and you're making your moves based on your bank statements, that's too late, because you already spent the money, right? Organization, you're being more reactive versus proactive, right? As an organization, you need to have a plan on where the money is gonna go, right? And at the end, you could compare to make sure the money did what you wanted to do, all right? And if you need to make adjustments, the roadmap is not, you make adjustments, all right? So, that's what you need to do. So, let me see. Alright, so, maybe I'll bring this one up though. So, y'all all gonna have a copy of this, alright? So this is gonna be just a household budget tracking. You're gonna see I have 3 columns. The first column is talking about your budget. This is the beginning of the period, the first of the month. So a cash statement is looking at a balance sheet, looks at a position at a point in time. Statement of cash flow, or also a spending plan is looking for a period, and this is usually over a month. And usually when we look at budgets, we usually see, or spending plans, we usually see 1 column, okay? We wanna focus on 3 columns. Our plan, what actually happened, so we can make sure that we did what we said we was gonna do. Not just make a plan and not wonder if it's working. And then we're gonna have a variance, how well did we stick to our plan? And then we'll allow us to make any adjustments in order to make our goal, right? So we make a budget. One of the first things, again, you're gonna do your balance sheet, which we gave the balance sheet there. You're gonna write down all the stuff that you own, right? And then it's gonna be all the stuff that you owe, right? And then after that, you're gonna have an equity. This is what's left, your net worth. When you're looking at what you owe, you're looking at different credit cards, different car loans, things like that. And when you're doing that, when you take note of that, take note of the interest rate and the term, what's left, right? Take note of that, because that's gonna help us in a couple of weeks from now. We're gonna use that for another tool that we're gonna use, right? So when you have that, then you can start your spending plan, your inflows. It's the top part. Usually we do this in a monthly period, so that's what you make in a month. And to make it easier, I recommend doing your net income, right? Because that's what you bring home. If you use gross, you can use gross, but then later you have to make additional lines and take taxes and things like that out, right? But if you just put the net, you don't have to worry about those other additions. So have on the top your income monthly. So if you get paid monthly, it's easy. If you get paid weekly, you can average it out, or you can put how many weeks you get in that month. If this week you're getting 4 paychecks, put 4 this month you're getting 5 to 5. That's my preference, but it's not right or wrong. That's how I work in it. And then you have your expenses. Now you're gonna see, you're gonna get this as well. You have different expenses in different categories. So you have your fixed expenses. These are expenses that really don't change. Now, we have tithe on top. The first thing we do is tithe. Now, in order to get help from us, we're not telling you have to tithe, you have to put this first. But we're definitely gonna recommend, and as a church, as one of our practice, we do believe in tithing. We do believe in giving 10% of our first increases, right? But when you make your budget, don't make a budget to impress me, because it's not gonna do any good. Don't do a budget to impress her or anybody. Make your budget, right? And we're not gonna judge, and it's gonna be between whoever's looking at it. It's not whole classes for if someone's helping, it's that person, that facilitator, and you. All right. But you have your fixed costs, things that really don't change, and you have variable costs. Some variable costs are semi, means that it changes but not a lot, and you have some that are extremely variable. All right. And I think this is something that people get caught up on. They have variable expenses. If you have kids, a couple of months ago, we had back to school shopping. A lot of us who, even if we have a budget, we probably would have forgot back to school shopping, right? We have in a couple of months, we have Christmas shopping. A lot of us gonna spend money, but we probably won't see that in our budget. You're fooling yourself, right? Put that in your budget. Some of us go out to eat sometime, right? Some of us go out and entertain. If you don't have that in your budget, you're fooling yourself, right? I'm not trying to go crazy with it, but make it in your budget, so at least it's there, and try to put it somewhere where you can manage it, where it's just not managing you, and you being reactive versus proactive. All right, and then when you're done with your income, your expenses, we're gonna have a net income. That's gonna be what's left over. All right, what's left over is gonna allow us to. That's when we start the spending plan. All right, what's left over is what we're gonna use to help us with our goals, as far as paying off our debt and as far as savings. All right, and we're gonna show you some different strategies later on to how we use that to make that grow. All right. Any questions?
I wanna jump in first.
Okay.
Very quickly. I saw some of you guys a little scared, right? Cause he's all in an accountant, words and everything. But, this is for everybody. It's very basic what we need you guys to start understanding. As you can see, the sheet that we gave to you guys, it's very, very easy. What you owe, let's just, a very quick example. If you have a house, your house is worth it, 500,000. And then you still own that mortgage, which will be 200,000, so the value of your house is, whatever you have it as a value minus what you owe. So very, very simple, we just put a list, it's just cars, if you have a car, if you have a 401k, we detailed everything. I see you looking at the other page, the spending planning that the financial statement, right there, that you're using it. Okay, very simple. We ask you guys when we're doing this, a lot of you guys are not going to have a lot of things in the list. The one behind the financial statement. Yeah. So don't judge yourself when you're doing this. It's just so you know where you are right now. With the spending plan, it's the same thing, right? We just detailed all the expenses, the gas and everything. So it's very simple. If you guys have any questions, if you don't know what to do, like he says, we recommend looking to your banking account, which normally that's where we get our expenses from. And pray before you do, because we know from time to time, dealing with numbers, dealing with finances, it's very scary to some people, so we just kind of get frozen and you just pray. Anytime you start doing this, you just pray, and then a lot of people are going just to tell God, I cannot do this on my own. I haven't done this in the way that you're supposed, that you want me to do, but just be faithful that we all can do it. If you cannot do on your own, we have not other facilitators that you guys are going to see next week, and we're here to walk with every one of you. So me coming, I've been doing this, I worked with finances for 5 years, but way before that, and we're gonna tell our story next class, I had no idea, and I didn't have a class with all those things that we're giving to you guys, so I brought you guys just as an example that when I started, I didn't have a budget, I didn't have a spending planning, I just went on a paper, writing down everything that I spend, right? Because that was very important for me, for us, for me and for my husband. And then I started getting better, I put it in a little, Excel, and then I started getting better, and I still started doing colors, different colors, so it's a process. And it doesn't matter where you are, it doesn't matter how you're gonna start this, you do it, and it's going to get better every day, okay? That's all I'm saying.
Does this